Hi, this is Brian Resnick. It's question and answer day. And one of the questions I've received a number of times in the last week or so is about interest rates and the effect of interest rates on the economy, and more so what's called an inverted yield curve. Let me talk a little bit about interest rates. Interest rates still are hovering around 1.75% on the 10-year. They haven't really gone anywhere. And in fact, because probably the job number that came out last week, which was extremely light and less than it really probably should have been, I think a lot of people are anticipating no interest rate increase in the month of June or July. It may still happen, it may not happen, but rates basically pulled back a little bit. Until the economy is really showing signs, I think, better GDP growth than 2%, the Fed may lay off. Or they might say, you know what, that's an anomaly, that jobs report last Friday. We're going to raise a quarter point anyway. A quarter point here and there is not going to affect the economy on the negative side. That I can tell you. The other part that the question is the inverted yield curve. The inverted yield curve is something we look at very close. We look at interest rates every single day at my firm because we're constantly researching. But an inverted yield curve essentially is when short-term rates are higher than long-term rates. So basically, usually you have short-term rates that are going up and, of course, long-term rates. But when they're inverted, short-term rates are much higher than long-term rates. We've never had a recession unless we had what was called an inverted yield curve, meaning the Fed's raise short-term rates too fast. It usually pushes us into a recession. That's not currently happening. Now, it's not to say that you can't have a recession without an inverted yield curve. We just never have. It may be different this time. There's no guarantees of the future, but I will tell you we do look at interest rates closely, and an inverted yield curve is usually a big warning sign, which we do not have now, I will tell you that, and not even remotely close, but it is a warning sign often to a pending recession. If you're not a client of our firm, call my firm for a consultation. It's time you became a client of Resnick Wealth Management. Have a safe and profitable day.